Good morning, everyone, and welcome to JRG's webinar for November, which is going to be on the employer reporting requirement changes. This webinar is going to be addressing the 1095Cs and 1095Bs that large employers and self-insured employers are required to do for their 2016 offerings of coverage. Just a little reminder that everyone will receive a copy of the PowerPoint and the recording, and answers to any questions that come up during the webinar. We'll send that out a couple days after today. Also, if you do have questions, please send them to us via the email, via the chat there, and we'll make sure that we'll address them at the end. And again, I will try to get to the information as thoroughly and quickly as possible, so you do have plenty of time for your questions. We'd like to go ahead and thank all of our partners that we have who participate with us. Again, it makes it possible, so thank you for, if you are one of our partners, membership partners, thanks for attending today. As we begin to look at our agenda, we have information on, again, Section 6055 and 6056. That's actually the statutory, the statute which addresses the 1095C and 1094C reporting. We're going to talk about some hindsight. So let's talk about some of the problems that the large employers had with the reporting that they had to file in 2016 based on 2015 information. Going to go over the 2016 reporting changes. Again, the IRS put out new instructions, new forms, and there have been some changes, so we just want to make you aware of them. And then let's go ahead and, just moving down a little bit more, let's get ready for 2017. Some quick checklists, some things that you should be thinking about as you're preparing to do your reporting. And then finally, let's see what we're talking about. We're going to have some sample forms up here that you can go ahead and see. So in starting our review, we just want to go ahead and remind everyone that the Affordable Care Act, it was enacted solely for the purpose of increasing quality and affordability of health care, expanding public and private insurance coverage, and reducing health care costs for individuals. Now, the ACA provided for various mechanisms to meet those goals. Specifically, it was the individual mandate, the exchange subsidy, and the employer mandate. So quick summaries of those three requirements are: the individual mandate requires that every U.S. citizen be covered with what's called minimum essential coverage, or MEC, or pay a penalty. For 2016, the penalty is $695. Now, in order to keep coverage affordable for certain individuals, there's a premium substance for some who get coverage on what's called the marketplace exchange. Now, certain conditions have to be met to get that subsidy, but it is available. And then finally, under the employer mandate, it's expected that employers provide health care coverage to their full-time employees and not just say, we don't want this responsibility, we don't want to be concerned about it, go ahead and go on the exchange and get your coverage. We know under the employer mandates, under 4980H, there are two penalties, a penalty A and a penalty B. So let's start reviewing again Section 6055 and 56. These mechanisms that the ACA gave to individuals and to employers to meet requirements, the statute also gives to the IRS various mechanisms to get assistance so they can see whether everyone is complying, whether individuals are complying or whether employers are complying. Now, 6055 assists with the administration of the individual shared responsibility. Again, the requirement to escape that individual penalty is you have to be covered with MEC. So the way the IRS can only know if you're covered with MEC is if whether an insurer reports that information or an employer who has a self-insured plan. It also helps the individual employees prove compliance with the individual mandate. They're going to get that 1095B and they can say, can't penalize me, I have my form here to show I have my coverage. So it tells the IRS no penalty can be imposed in that situation. Next, under 6056, that's lovingly known as the employer mandate reporting. And this shows the satisfaction of the employer mandate, which means it shows that the employer met all the requirements in order to avoid penalties. And it also helps individuals by telling them whether they were offered coverage that was, one thing, minimum value, minimum essential coverage, and affordable. So continuing with our review, let's again start with section 6056. This section is applicable to small employers. Small employer is one that's not a large employer. And we know a large employer is one who has 50 or more full-time or full-time equivalents in the preceding calendar year. So if you had less than those 50 full-time equivalents, then you are a small employer. So section 6055 provides that if you are a small employer and you provide self-insured health care coverage to your employees, then you're responsible for doing what's called the 1095B. And then also you have to report to the IRS on a 1094B. What you report is whether the individual had what's called minimum essential coverage. And you're going to be reporting everyone who was enrolled, not just the employees that you may have, but any spouses that were covered and also any dependents. Now, in order to have to make a report for an individual, that individual had to be covered only for 1 day in a month, and then you can report that they had coverage. Now, if you're not an ALE and you're fully insured, then the insurer reports. So let me give you an example. I own a company and I have 35 employees and I'm fully insured, and I will say I use Blue Cross Blue Shield. So since I'm fully insured, less than 50 employees, Blue Cross Blue Shield will be telling my employees whether they had met. They'll be providing the 1095B to the employee and they'll report to the IRS. So another example, I have a company and I have 25 employees. And I have decided that the best way to offer coverage to my employees is to self-insure because they're pretty healthy, my risks are low, I can, I have enough money, my business is good enough that I can go ahead and self-insure that. Self-insured means that the employers are paying for those benefits, those claims, out of their general assets. There's not an insurance company involved. So here I am, my 25 employees, I'm self-insured. I'm responsible for providing to my employees that 1095B, and I'm responsible for reporting to the IRS on a 1094B. So pretty long explanation there, hope it was helpful. Next we talk about section 6056. Again, this is known as the large employer reporting, and it's applicable to ALEs. Again, someone who has 50 or more full-time equivalent employees. And they report information on a 1095C, and they report to the IRS on a 1094C. So anytime you have you have to report a 1095C or give a report to any full-time employee as long as they were full-time for at least 1 month of the year, and that's a complete month. So just to get that clarified here, so if you have an employee who comes in and you say, yep, you're going to be full-time, you're going to work a lot of hours here, and they only work for 2 weeks and then they quit, that person wasn't full-time for an entire month, so you would not have to include them on your reporting. The other thing that I want to mention when we're talking about these large employers, whether you have 50 or more employees, always have to remember, are you part of what's called a control group? When we look at the forms, they refer to a control group as an aggregated group. And what that means is we're going to aggregate you. If you have an owner of the company and they may own company A and company B and company C, we have to look at all 3 companies in the aggregate because one person owns that. One person has common control to see if we meet that 50 employee requirement or not. So again, keep that in the back of your mind. So again, the 1095C goes to all full-time employees and then any part-time employee who was enrolled in a self-insured plan. So on MEC reporting basics, again, the MEC reporting, an employer or the health insurer, if you're fully insured, uses 2 forms. two forms, the 1095B and then the 1094B. On the 1095B, we're providing general information. We're giving names, addresses, EIN. EIN is an employer identification number. A business has that, or a social security number. That's what the employee has. The person that gets a 1095B is considered the responsible individual. So it's basically the person whose name that contract of coverage would be under. So in my case, Francis Horn would be the responsible individual. We're also going to be reporting for covered spouses and dependents in certain situations, and we also have to have their social security numbers too. And under the MEC reporting, you will be reporting the months of coverage. So if you had an employee who you only covered them with MEC, a small employer, self-insured, and they only had coverage from January to February, you would report coverage January, March, January, February, and then for the rest of the year, no coverage. Now, once you give a 1095B to an employee, you're also responsible for giving a copy of that form to the IRS. And you do it by what's called a transmittal form. And a 1094B is the transmittal form that goes to the IRS with all your copies of your 1095Bs. Now, on my slide here, in this last couple bullets, you see I say 1095B or C for each responsible individual. And we're going to talk in a couple of slides how if you are a large employer, you may want to go ahead and report information for MEC coverage on a 1095C instead of a 1095B. Going to the next slide. Now we're going to talk about the basics for you as an applicable large employer. And for this reporting, we use the forms 1095C, which goes to the full-time employees, and 1094C, which is a transmittal form to the IRS. Again, we're using this form to report information about the type of coverage that you offered your employee and any enrollment they may have in healthcare coverage for the full-time employees, and then also any other individuals who may have been covered under a self-insured plan who were not full-time employees. You're going to be reporting, and again, you report on a monthly basis, although this filing is only done yearly. You report the employer, general information, name, address, social security number, or EIN. And then for your full-time employees, as long as they were a full-time employee for at least 1 month in the year, you're going to be reporting their name, address, social security number. And then again, for a self-insured plan, any spouses or dependents that were covered. Now, if you don't have the social security number for an individual, you can then go ahead and use a birth date or what's called a TIN. A TIN is a taxpayer identification number. However, if you use the birth date, there are certain steps or processes that you have to go through, and you have to give proof to the IRS that you made at least 3 solicitations to get that social security number. Now, we have a whole slide on that in about 10 minutes, so we're going to just put you on hold with that thought in your mind for just a couple of seconds there. So what do we do with these forms? Again, we file with the IRS the Form 1095C, or a copy of it, that we give to each full-time employee, and then we file the 1094C, the transmittal form. And 1095C, and I know it's being repetitive, but you know, sometimes we need to keep hearing it again and again. 1095Cs are for full-time employees. So when do we have to do all of this? You know, the form and the due date. As a reminder, reporting is done on a calendar year basis. So even if under your health plan you say, well, geez, our health plan starts in June and then it ends in May, so I don't have to report for January, whatever. This is always done on a calendar year basis. You're always doing your reporting as such. And the key to remember is because this is a tax form, and generally all tax forms for individuals are on a tax year basis. Now we also know typical tax form information If a filing falls on a Saturday or Sunday or a holiday, then it is due on the next business day. So as to the Form 1095B and 1095C, again, forms that are going to individuals, they have to be given to the individual, either the full-time employee or that responsible individual, by January 31st of the year following the year that you offered coverage. So for 2016, you're filing for your 1095C or 1095B. It's due by January 31st, 2017. As for your transmittal forms, the forms that go to the IRS, the 1094B or 1094C, they will be due depending on how large of an employer you are and how many forms that you have. If you are filing for less than 250 forms, then it's due by February 28th of the year following the year that you offered coverage. If you are filing more than 250 forms, you must file electronically, and it's due by March 31st. Now, if you have 250 less and you want to file electronically, you're permitted to do so. It's just that you are required to file electronically when you have more than 250. And on our slide, we talk about extensions, and again, we have a slide on that, so we're going to get into that in a couple of minutes. You know, hindsight is 20/20, isn't that what they always tell us? And it's the same with this reporting. I think one consensus that we have is that the reporting was just fraught with confusion, fraught with misunderstandings, and, you know, really, at some point, the left hand not knowing what the right hand is doing. So let's see some of the problems that you probably faced if you did this filing last year. The first thing, and to me I think was probably the most important, was you weren't sure what code you had to use. And when I'm referencing the code, that was on your 1095C Part 2 on line 14 and 16. You had a Series 1 code or a Series 2 code you had to put in there. And again, unless you really had read the rules and the regulations and the instructions over and over and over again, like I did, you probably weren't clear on just saying, geez, do I do a 1E or a 1C and a 2D, or what do I do here? So the instructions hopefully are giving a little bit more information to help clarify that, but that was probably the #1 problem. The next is that confusion about common control groups and the authoritative transmittal. Now, I know I talk to many employers, and it may be, geez, I didn't even know we were part of a common control group until late December when I started talking to the owner about this. And so now I find out there's 3 other companies involved. What do I have to do? Well, unfortunately, the analysis has to go into, are there 3 companies or are there 3 divisions? You know, who owns those companies? Are they really under control group? But the main rule is, if for any group who is considered a part or an ALE member of common control or an aggregated group, each one of those employer members must file a 1094C that is marked as the authoritative transmittal. On the other hand, if you have one company and you have 5 or 6 divisions, then you only file one 1094C and mark only one as an authoritative transmittal. The third bullet, again, another key issue. Employers just did not recognize the volume of work that was entailed in doing this reporting. As they were digging into it, having to say, oh my gosh, I have to look back a year ago to see when this employee was hired, when I offered them coverage, what kind of coverage, were they in a waiting period? For those employers who may have had employees who leave and then they were rehired, you know, what do I do with them? Geez, I had employees who terminated. What do I do with COBRA? Again, just the information was really huge that you had to report. And many of us do not go into it recognizing there is a lot of work that had to be done here. And then we kind of can blame the IRS a little bit on this too, because they didn't release those instructions and forms until late in the year. really the final instructions came out in mid-September, actually September 17th. And knowing all the information you had to gather and get into a form, that was really great to have that information. For those of you who wanted assistance, it was hard to find a vendor who really could help you properly. The vendors were scrambling, trying to read the rules. How does this apply? What can we do? What can't we do? So unfortunately, there are many good vendors out there, and sometimes there are not as many as good vendors. So assistance was hard to find in that area. And then the out of the ordinary scenarios. Again, I kind of mentioned those. What happened when we had people who were terminated, they were offered COBRA, or maybe they just were offered COBRA because there was a reduction in hours. There were different rules on that, how you reported it, and it was just very confusing. Again, difficulty with vendors at aggregating your information, difficulty with the IRS electronic filing system. I know even as of January, even the IRS was still testing that system. So again, a lot of issues going on. Still looking backwards and saying, what could have been done better? This name and taxpayer identification number. I know I had several phone calls from employers saying, I'm getting this message that's saying my filing isn't being accepted by the IRS because the name isn't matching the EIN. Either the company name isn't matching the EIN, or the employee's name or a dependent's name isn't meeting the Social Security number. And so again, causing a lot of confusion. And the other confusion that was caused is because the IRS kept telling us, oh, if you make a good faith effort, if you try to meet that standard, you're not going to have to worry about penalties. But then all of a sudden, we did our best to meet the requirements, and something was mismatched, and we'll start getting notices about a possible penalty that could be imposed. Well, how does that fit in? I met I did as best as I could. So again, a lot of confusion there. Confusions about what were known as transition relief, and again, most of that's gone away. So we'll see what's happening in 2016 reporting. So the first thing that we want to talk about, the changes. Remember, last December, almost at the very end of the year, they say, okay, everything's delayed. You were supposed to report January 31st. However, we're going to give you to March 31st now to go ahead and file, and you can give your information to the IRS by June. The key thing to remember now, there are no deadlines. The deadlines for reporting are January 31st, February 28th, or March 31st. There are no extensions and no delays, and we don't see extensions being offered here. So the key is get these deadlines down and make sure that you make them. Because again, the other thing that has been removed, the good faith language. They are expecting now that this reporting is to be done correctly, on time, and that's the expectation, that's the standard that they're setting. So again, remember, the original deadlines as reported in the statute are back in place. On Form 1095-C, not a lot of changes were made on this, but a couple that we want to go ahead and mention. The authoritative transmittal, again, the instructions provide clarification that each ALE member should file only one. Now, even if multiple 1094-Cs are filed by the ALE member. Again, what that means is that if you have different divisions and you're giving out different 1094-Cs for each division, only one will have on it authoritative transmittal. They've notified us, the required corrections to the filing. If you have an incorrect name or EIN, or you have, or your applicable large members, if you're part of a control group, if any of that information is incorrect, you have to do a corrected filing. So they are also enforcing that. And then finally, they reminded us the full-time employee count. If you're a large employer, on your reporting form to the IRS, there are several places where you have to give counts. Counts of full-time employees, counts of just employees in general. When they say full-time employees, they mean the ACA standard. And the ACA standard is an employee who works on average 30 hours a week or 130 hours a month. So you as an employer may say, well, most of the time employees have to work 37.5 hours or 40 or 35. When you do this reporting, they are looking at someone who works 30 hours a week and not your definition, unfortunately. So the one thing I want to go ahead and also mention, when we're talking about the names, make sure you put down the legal name of your company. If my company is ABC, comma, and I'm an LLC, that's my legal name, that's what I should use. I just can't put in there ABC, and I can't change it to ABC Company because that's not my legal name. So make sure that you're using the legal name that matches your employer identification number. On Form 1095-C, again, the form that goes to the full-time employee, one of the changes they made is that on Part 2, line 15, it stated premium amount. Well, many employers thought, well, this means that the premium that is charged for the employee coverage, meaning the employee and employer contribution combined. And that was incorrect. So what the IRS did is they changed the language to read now employee required contribution, hoping that it clarifies. They're only looking for the amount of money that the employee has to contribute, not what the entire cost of the coverage is. Again, we talked about required corrections to the filing. If you had corrections because of errors in an employee name or the required contribution, that does require a corrected filing. We mentioned this TIN solicitations. Again, we're going to talk about that separately. For any of you, based on looking at who's participating today, I don't think we have any union employers on there. But the previously issued guidance, it talks about a multi-employer plan. A multi-employer plan is one that is sponsored by a union. So if you have union employees and they participate in the union plan, not your group health plan, you still must report for those employees. It's just how you report. You do report that you offered them coverage, but you don't report that they weren't covered. You report that they were covered under the union plan. So again, that's the most of the clarifications, just a couple more here. Again, when we look at Form 1095-C, the coding changes. We've already mentioned those famous codes. The first code is the Series 1 code, which goes on Part 2, line 14. First of all, the code 1I has been removed. 1I referenced a qualifying transition relief. That transition relief is no longer available, so they removed the code. They have put in two new codes, and that is 1J and 1K. These two codes are used when, as an employer, you offer coverage to your employees and their spouses, but you may put conditions on that spousal coverage. You may say, we'll cover the spouse if they don't have their own employer-sponsored coverage. Or we'll cover the spouse if they don't have any other group health plan coverage. So those are conditions for them to be in your plan. And if you have those type of conditions, when you report the offer of coverage on line 14, you use either a special code 1J or 1K. The next clarification they gave us on Part 2, line 14, there's this code called 1G. And 1G reports an offer of coverage to someone who's a non-employee. So let's talk about who's a non-employee for a minute. If you would be covering directors under your plan who aren't employees, who don't come to work every day and get that paycheck, you would report them as a 1G. If you have someone who is covered under COBRA and they were not an employee for any day in the month, they would report coverage as 1G. So again, under COBRA, if they have been gone for longer, they have 18 months of COBRA coverage, and for one whole year they received COBRA coverage and they were never an employee that month, you'd use a code 1G in that situation. Also, they clarified whenever you check the box all 12 months, you don't check the monthly boxes. On Part 2, line 16, that's where we used the Series 2 codes. And again, they just remind us, checking 12 months, you don't have to check each individual box. Another reminder, if you use a code 2C, it should not be used in a month where an employee is enrolled in coverage that was not minimum essential coverage. So if you are an employer and you're only offering your employee MEC coverage, which many employers do, when you do the reporting, you would never use 2C for just MEC coverage. And we're going to look at some of the forms to help clarify those a little bit. And then finally, on Form 1095-C, reporting that COBRA coverage. We have to look at COBRA coverage based on two ways. Is there post-employment such that they may have been offered COBRA, but they're still working? So that could be a situation where someone, maybe went from full-time to part-time and then lost the coverage. So an employee who remains employed after reduction hours is reported in the same manner as in 215. Now, if you're not sure what 215 says, the next two bullets remind us. So that tells us a terminated employee on Part 2 with COBRA coverage reported as 1H, no offer of coverage for that month. And then on line 16, you report 2A, the employee was not employed. Again, that's someone who terminates, they're gone. They're no longer with your company. The next instance on Part 2 lines, if COBRA is made to an active employee, again, going from maybe full-time to part-time, you report that in the same manner as you would any other employee. Post-employment non-COBRA coverage, this means this is a situation where maybe you gave someone a severance package when they left. And you said, as part of your severance package, we're going to continue your coverage for additional 6 months before we even start to look at COBRA. So they tell us if you're going to do that, a Form 1095-C is required, and that you would report codes 1H and 2A on any of the months, again, where they were in that severance period. Finally, on 1095-B, just a reminder what minimum essential coverage is, or really what it isn't. It's not coverage for workers' compensation. It's not dental or vision coverage only. It's not if you have, under maybe a voluntary program, if you have specific disease coverage, such as for maybe cardiac coverage or cancer coverage, that is not considered MEC. And the final reminder they gave us, again, about the 250 form requirement. You have to file electronically if it's 250 forms. However, that requirement applies separately to original returns and corrected returns. An example, you're filing 300 original 1095-Cs. So you have to file electronically. After you did all your electronic filing, you discovered that 50 of them had mistakes on them that you had to correct. So when you do your corrected 1095-Cs, you would file those by paper, not electronic, because 50 is less than 250. Finally, we're going to talk about transition relief. In 2015, there were a lot of rules going on with transition relief. It talked about, geez, if you were supposed to report if you were a large employer had 50 employees, but for transition relief, if you had 50 to 99, you didn't have to offer coverage, but you still had to report. We had transition relief that said instead of offering coverage to full-time employees, we had having to offer to 95% of those employees, they reduced it to 70. This is just a reminder telling you that transition relief is gone. There really is not very much transition relief available. And the one that is still available is if you had transition relief because you had a non-calendar year, you will continue to get transition only for those months that are part of that non-calendar year. And hopefully my example explains it better than what I just said. So here you are, you're ABC, you had 75 full-time employees in 2014. So due to that 50 to 99 transition relief, you didn't have to offer coverage in 2015 as long as you met certification requirements, but you decided that you would do it. And you started to offer coverage as of March 1st. That was the beginning of your plan year, and it went to February 28th. Now, so in 2016, due to that transition relief from the previous year, you were not required to offer coverage in January and February of 2016. But as of March 1st, 2016, you definitely had to comply. So again, when you do your reporting, you could report that only January and February as transition relief. Again, it's very limited. So the information that's applicable to both reporting requirements under 6055 and 56, that's the penalties. You know, they keep saying make a good faith standard, comply as best as you can. However, if you don't, now we're going to get you if we find mistakes, we find errors, or if you just don't report. Remember, the penalties apply for either failure to file an information return to the IRS, just like if you don't file a W-3 with the IRS for your employees, or failure to file an individual statement to give it to your employees, just like you could be penalized if you don't give a W-2 to your employees. That penalty has been increased for 2016. It is now $260 per return, and a maximum of approximately $3.1 million. We know that it can be waived if it's due to reasonable cause. They don't give examples of reasonable cause, but it has to really be a good one. Again, the good faith standard for not getting your work done for 2016, it's gone. You have to file timely, and it has to be complete. Now look at a little word of caution there. Now remember, a 1095-C must go to the full-time employee, and you have to give a copy of that 1095-C to the IRS. So remember, if you don't do a 1095-C, it's not just a $260 penalty, it's $520 per employee that you do not do a 1095-C for. Again, because it's a duplicate reporting, one to the individual, one to the IRS. If you don't give it to the individual, you can't give it to the IRS. You could be up to, again, $520 for each one that you fail to provide a 1095-C. Okay, so let's get ready for 2017, because here it comes, right? I had mentioned previously as to the filings that extensions can be requested. After furnishing the form to an individual, a 1095-C, a 1094-C, you have to get an extension in writing. You have to request it by a letter to the IRS. You must put in there the name of the employer, the address, the EIN, and you must say why you need the extension, the reason why you are not going to get your forms out in time. The key thing with this is if you don't think you're going to get your forms done, request that extension early, because if you wait until January 30th, if you don't have a response by January 31st and you don't get your forms out, then you can be penalized. And it may take them a while to get back the information to you. So you want plenty of wiggle room as to waiting for that extension or not. Again, we just want to make sure that's not automatic. It has to be granted. As to filing the form to your IRS, you can also ask for an extension. This is your form 1094-C or 1094-B. You can actually get an automatic extension. You do have to file Form 8809. As long as you file that before the deadline, the extension is automatic. They don't have to grant that to you. So getting ready, let's start preparing. Let's start looking at all the information we need. The first thing, did we offer MEC coverage to our employees, to our full-time employees? Now, if we're a fully insured plan, after that MEC reporting, we know the carrier is going to do it because the insurer does that for fully insured plans. my word of caution here is, I talk to a lot of employers who have a group health plan. It may be a PPO, it may be a high deductible health plan, and then they provide an HRA with it, a health reimbursement arrangement. A health reimbursement arrangement is considered a supplemental plan, and it is self-insured. Now, since it's self-insured, you would think, geez, I have to report that as MEC coverage. The guidance that we have received, and I'll try to say this as slowly and as concisely as possible. If you do have a health reimbursement arrangement, and the requirement is that the employee must be covered under your group health plan to get into the HRA, you do not have to report your HRA as MEC coverage. However, if you have an HRA and you say, geez, Mr. or Miss Employee, if you have coverage somewhere else, maybe by your spouse's employer, you can still get reimbursements from our HRA, then you do have to report for those individuals because that is considered MEC, and that's because they're not covered under your group health plan. So under a self-insured plan, you do the MEC reporting if you are not an ALE, and again, self-insured. And if you are an ALE and you're self-insured, you're going to be doing it because you're doing a combined reporting to your full-time employees and also reporting MEC. So again, our preparations. First of all, are we an employer that's subject to the mandate 2016? Did we check our employee count? Or do we have 50 or more full-time or full-time equivalent employees? Did we make sure, are we a part of a control group or not? Were there other employers around, other, companies that my employer, the owner of my company may have owned that I didn't know about? And it may have skewed things a little bit. Just remember, 1095C, each full-time employee. Transition relief, we just mentioned that it's only relevant if you had a non-calendar plan year, and it's only applicable for the months in 2016 that fell within that 2015 plan year. Start compiling your employer information, basic information. Know the legal name of your company that matches that EIN and the address. You're going to need a contact person. You're going to need a contact name. For the large employer, you're going to have the number of employees for every month in the year. And then those number of full-time employees for each month of the year. Now remember, full-time is based on ACA requirements, 30 hours a month, 130 hours a month. Not 40, not 35, not 37 and a half. And again, if you are in a control group, you need to know those control group members' names and EINs and EINs. As you continue to get ready, start compiling your employee information. The name, address, Social Security numbers. If you don't have a Social Security number, start asking them for it, or find out, make sure you have a birthday or a TIN. If you're an ALE, what's the employee full-time for any given month in a year? Again, did you have somebody that, oh, I forgot, that person came and worked one whole month in August. I completely forgot about him. I have to do a report. Did you have exceptions for offering coverage? Was this employee being measured? Were they in an initial measurement period? Did they leave for a while possibly? And remember, furnishing the forms, if you are going to furnish electronically to the employee, we're not talking about to the IRS now, you must always get employee consent. And it has to be in writing to give them that form electronically. When we talk about, again, I'm just jumping back to the employee for a full-time for any given month, again, consider whether you're using the monthly measurement period or whether you're using a look-back measurement period. If you're an ALE, information about the Office of Coverage. Was it minimum value? Did it meet that bronze plan requirement? Was it affordable under the employer mandate? Affordable for 2016 means that the employee-only cost for your lowest cost plan did not exceed 9.66% of the employee income using one of the safe harbor requirements. The safe harbors that we're allowed to use as an employer, we can either look at an employee's wages based on their W-2, we can look at their hourly or salary rate of pay, or we can use the minimum federal poverty level. Did you offer coverage to the employee, the spouse, and the dependents? Or maybe just to the employee and dependents? Actually, who did you offer that coverage to? Were people covered under COBRA? You know, do you have any stragglers out there? And again, did you offer MEC to at least 95% of your full-time employees and dependents? This is a slide I talked about the SSN solicitations. The requirement is if you're reporting information under MEC coverage, you have to provide the Social Security number for the employee and any covered spouse and dependents. If you're only reporting as a large employer, you have to have the Social Security number for your employee. If you don't and you do the report, you can then use either a tax identification number or the birth date. However, when the IRS sees that, they're going to say, what's up here? Why did you not have that Social Security number? And if you don't have the SSN, you have a solicitation requirement. And the first solicitation is required whenever you form the relationship as to offering the coverage. So basically, either when the employee first becomes eligible for the plan or during your open enrollment period. Your second solicitation is then due no later than 75 days after that date of application for coverage. So if you had, you were looking for Social Security numbers and your open enrollment was October 1st and you didn't get some of the Social Security numbers and you wanted to go and ask again for them, you need to do that by the middle of, 75 days would be the middle of January from October. Well, we need to do the math on that, I'm sorry, but 75 days after October 1st. And then finally, you have to make a third solicitation. And that has to be made by December 31st of the year following the first solicitation. Again, you had open enrollment in October of 2015. Your third solicitation must be done by December 31st of 2016. And you have to be able to prove that you made that solicitation. So if you're only soliciting by phone, make sure you're keeping extremely good notes and you're documenting it somewhere. You can also do it by mail. Send them a letter. Keep copies of those letters that you would send. The next thing that revolves around Social Security numbers are mistaken, either TINs or Social Security numbers. You get a message back. You turned in this SSN number and you said it was for John Smith, and guess what? They don't match up. So again, you have to start soliciting, and you'd also have to, once you do get the correct SSN, you would have to file a corrected form. Basically, the solicitations are the same. First solicitation when you first offered them coverage, when they first were covered, by December 31st of the year following your first notice, and then the third solicitation by December 31st of the year following that. In talking about Social Security numbers, I just briefly wanted to touch on a lot of questions about truncating SSN. Truncating means just using the last 4 digits and X's or stars in the first couple of numbers. You can truncate a Social Security number on a form that goes to the employee, but not on a form that goes to the IRS. So let's talk a little bit about now what we have been talking about. So as we go to the first form, this is the form 1095B that's provided to individuals covered with MEC. You're going to use this form if you are a small employer and you're self-insured. If you're fully insured, look at my little guy, stop, you don't have to do anything here. So I try to highlight on the form some of the corrections, some of the changes or clarifications that were made by the IRS. So we talk about, the first thing is, underneath health coverage, it says, Do not attach to your tax return. Keep your records. Your employee does not send this in when they do their 1040. They keep it for their records. So yeah, that's the answer if you get asked that question. We talked about the Social Security numbers and 3 solicitations if you don't have it. We talked about Emma employee. She's the employee. She was covered for all 12 months, so we checked that box all 12 months. Looks like David employee, which was either Emma's child or Emma's spouse, only came on towards the end of the year, so we only checked the months that he was covered in. The next sample is the 1094B, which is provided to the IRS. Again, if you're a small employer, self-insured, otherwise the insurer will handle this. This is a pretty cut and dry form, and there really weren't any changes made to it. The next is Form 1095C. This is what you give to your full-time employees and any other individuals covered under a self-insured plan. It's used by large employers, regardless of being fully insured or self-insured. However, if you are fully insured, our arrows show us you only complete parts 1 and 2. If you are self-insured, you complete parts 1, 2, and 3. I highlighted with a red circle on line 15, where remember that change. The IRS is now saying employee contribution, not what is the cost of health care coverage. The next is Transmittal Form 1094C. Again, you provide this to the IRS when you send in your 1095Cs, and it's a large employer completes it, whether fully insured or self-insured. I've highlighted line 19. Just drawing to your attention again that this is where you complete whether this is the authoritative transmittal. Remember, only one authoritative transmittal for each ALE member. The second page is the transmittal. This is where, again, you're reporting, and you'll report for all 12 months. Under column A, you report whether you offered minimum essential coverage or not. Under column B, you report your employee full-time employee count. Again, just full-time employees. A full-time employee, if they are in what's called a assessment period, you do not count them for that month. As to column C, that is total employee count. Full-time, part-time, seasonal, a temporary employee. So you want to know the difference between there. I don't have a slide on it, but if you want to take a quick note, when do you count your employees? There are basically 3 ways. When determining your full-time employees or your total employee count, you can look at the first day of the month, the last day of the month, the 12th day of the month, or the first day or the first payroll period in that month. So I would suggest using either the first day, the last day, or the 12th of the month. Those would be the easiest to use. And then finally is the third page. You are only going to use the third page if you are part of called that control group. You have more than one ALE member that your owner is a part of. The next 2 slides I'm not going to go over, but the first slide are the codes for Part 2, line 14, the Series 1s. I've highlighted the new codes, 1J and 1K. The next is for line 16, the Series 2 codes. 2I is now reserved because it was changed from last year. And then finally, our last slide just is for your own information. It's a reporting matrix. You would look at it and you can say, yep, I'm a large employer, I'm fully insured, these are the forms that I have to do. And with that, we have about another 5 or 6 minutes, and I want to go ahead and look at any questions that you may have sent over. Okay.
If you have a question, please type it in the questions box and hit send.
Okay, no questions?
We do have a question here. The first question is, can we get a copy of the PowerPoint? Yes, we will be sending everyone a copy of the PowerPoint within the next few days, along with a webinar replay and any questions and answers that are asked during this presentation. The next question is, so any employer that has 50 or more full-time employees has to offer health insurance, is that correct?
Basically, the answer to that is yes. The requirement is that if you are an applicable large employer, that you're required to offer what is considered minimum essential coverage, that's minimum value and affordable, to at least 95% of your full-time employees. Now, if you don't offer this coverage, you could be penalized. However, you are only penalized, or the penalty is only triggered, if one of your full-time employees goes to the exchange and then receives a subsidy. So if you decide you have 50 or more full-time employees and you don't want to offer coverage, that's a business decision. But if one of those full-time employees gets a subsidy on the exchange or marketplace, you could be subject to a penalty then.
The next question, will we be notified by JRG if we need to complete these forms?
No, actually, that is your determination. You have to. You should be looking at your employee population from the preceding calendar year to see if you had to comply for this year. If you had 50 or more full-time or full-time equivalent employees in 2015, you have the requirement to go ahead and offer the coverage in 2016. And kind of going back to the previous question, even if you did not offer coverage, if you were 50 or more full-time or full-time equivalent employees, you are still responsible for this reporting requirement. You still have to give a 1095-C to your full-time employees by January 31st.
The next question, did you speak about transitional reinsurance program contributions?
Well, during this presentation, no, I didn't. And actually, I have not done a presentation on that, but that's a great question. And as a reminder, we know that the transitional reinsurance fee, the reporting by an employer for self-insured, if you're going to report, is due by November 15th to CMS. The way that you report that information is you go to pay.gov and you register. Once you register, you can then access the form and report your information. If you'd like to have a separate conversation about that, feel free to give me a call. I'm in the office all day today.
The next question, when is insurer responsible for 1094 and 1095 reporting? Is ALE responsible for reporting 1094 and 1095 if more than 50 employees?
Okay, good question. So the insurer is responsible for the 1095B and 1094B when an employer is fully insured. So again, my example, I have a company and I offer coverage. I have 35 employees. I work with Blue Cross Blue Shield. Since I'm fully insured, Blue Cross Blue Shield is responsible for filing the 1095Bs and a 1094B. So your next question is, an ALE responsible for doing a 1094, 1095? Yes, if you're an ALE, you're responsible. You must file a 1095C. You give that information to your full-time employees. You then report the information to the IRS using Form 1094C along with copies of your 1095C. And that's, again, if you have 50 or more full-time equivalent employees. And remember, you're going to report this information by January 31st of 2017, and you're reporting the coverage that either was offered or not offered in 2016.
The next question, is there a place on the 1094-C to indicate that a full-time employee is waived?
Actually, and I was surprised because I thought they would put a code for waiving. What you do is when you have a full-time employee on the 1095-C, on line 14, you are going to put, you'll insert whether you offer them coverage or not. I'll use the example of someone who was full-time for the whole year, and we offered coverage to the employee, the spouse, and the dependents, so that would probably be like a 1E. So I'm going to say I offered coverage to that employee. On line 16 is where I would just not report any information whatsoever because, again, there is not a waiver code. But what I suggest is if you use one of the, it's called the safe harbor codes. And the safe harbor codes, and I have to refer to my own little cheat sheet here for 1 minute. The safe harbor codes are either a 2F, you use the safe harbor based on W-2 wages, 2G, you use the federal poverty level, or 2H, the rate of pay. So again, the scenario, I offered coverage. On line 14, I put 1E. On line 16, I put either a 2F, 2G, or 2H. That tells the IRS you offered the employee coverage. It was affordable for them. It does not say that they were covered, though.
The next question, when is supplemental coverage required to be reported?
Supplemental coverage is required to be reported whenever the employee is not covered under another MEC plan sponsored by the employer. So in other words, let's say we'll use the health reimbursement arrangement as supplemental coverage. The employee is covered under the HRA and your PPO, for instance. You do not have to report the HRA supplemental coverage in that example. The second example, you have an HRA, but you say to the employees, you are covered under your spouse's employer plan. You can still participate in my HRA. In that instance, the HRA as supplemental coverage must be reported as MEC because they're not covered under your group health plan. So in other words, you're not sponsoring both of their MEC coverage.
The next question, how do you determine if an employee is considered full-time if they work variable hours? 1 week over 30, 1 week 15 hours.
When we're in a situation when we have a variable hour employee, we have to use something that's called, you either base it on, in determining full-time employees, you have to measure your employees. And the way you can measure is, you can either look at them monthly, from the first day of the month to the last day, or you can use what's called the look-back measurement period. When you use a look-back measurement period, you look back retrospectively for a period of time, and most employers will use a 12-month period for a look-back measurement. If they measure or if they average 30 hours a week during that measurement of time that you use, then they are considered full-time during what's called the stability period. So that's how you're going to determine that. Because you said they may work 30 hours, they may work 15, they may work 45 or 50. So you can look at it either on a monthly basis or on a look-back basis. The key is you must be consistent. You can't say, oh, John is variable, I'm going to use monthly for him, but Mary is variable, I'm going to use a look-back. It's based on your generally probably a classification of employees.
The next question, my company is part of a controlled group. The parent company and our company use different payroll companies. Is there any restrictions on the payroll company? Is there any restrictions on the payroll company not to prepare reporting documents?
I think the clarification has to be there is, again, this is a tax form, and as such, it is the employer's responsibility to do the tax form. Now, if your contractual agreement with the payroll company is that they will do the forms, that's separately. But under the statute, which we reference as 6055 and 6056, which is the reporting requirement, it is the employer's responsibility, not the payroll company's responsibility. Okay. Well, those were a lot of questions, and I appreciate it because it tells me, you're thinking about this, and if I get someone thinking, I feel like I've done my job. So hopefully you found the information helpful. And again, we're going to take all of these questions again. I will draft responses to them. When you receive the PowerPoint and the recording, you'll receive a Word document that has the responses. So I want to thank you for attending today, and hopefully look forward to seeing you on our next webinar, which will be December 8th. And the topic for that is going to be compliance. Have you been naughty or nice? Thank you for attending. See you then.